started with some quick introductions. I'm going to click through some slides here with what is grid, and then we'll go through who are we, and get ready. I'm going to ask you guys who all of you guys are as well. So get your elevator pitch prepped. But so grid is a local real estate investor community started in the Reston, Virginia area by my business partner, Rob Chavez. Rob Chavez and I have been in business as real estate agent partners since 2004. He started this maybe 2007, just kind of on a monthly basis, getting together with like-minded people that are interested in real estate as a wealth building tool or an opportunity to create additional income or full-time real estate agents. So it's open to kind of everybody from real estate agents to just full-time investors. Both Stefan and his business partner Danny, who many of you guys may have seen last month, are both agents and investors. But we're not gurus. We just kind of share what we know works, what's worked for us, stuff like that. There's going to be a little legal disclaimer in a second, being like, please check with your own attorneys and tax advisors. We don't pretend to be either of those. But basically, our mission is connect, learn from, collaborate with like-minded people interested in building wealth and creating impact through real estate. All experience levels are welcome. We just pride ourselves on kind of being lifelong learners. Frankly, one of the reasons why I started this and took this on as a additional monthly obligation is to learn. Like I get to hear, I've got a great excuse to ask Stefan to come and kind of share about what he's learned, so that I'm actually one of the primary students in the audience for sure. We're a growing organization, spread the word about grid, blah, blah, blah. All right, leader intros. Stefan, will you give us real quick, I'm gonna have you give your story in just a second, but just a quick, who is Stefan Rahimian? Am I saying the last name proper? Yeah. Stefan Rahimian, share a little bit about who you are, maybe just quick on your background. I'm gonna get you to go deeper in your story in just a second.
Okay. Yeah, so you mentioned I'm a real estate agent, I'm an investor, I have a construction company, and really I just help people make money in real estate. So, and I love it. I mean, when you asked me to come out here, I had spoken at one other grid event. It was just so much fun. It wasn't didn't make me money, but I just had a good time interacting with everybody, talking about real estate. I could talk for hours about real estate, so looking forward to tonight.
It's funny, a lot of times when clients will call me, or prospective clients will call me, you just kind of ask questions. And you'll talk to them for 10, 15, 20 minutes. And at the end of it, they're like, man, I really appreciate that. I'm like, dude, I love doing this. Call me anytime. I'll talk your face off. So yeah, I totally relate to that. So my name is Megel. I am the founder, owner, operator of CAZA Gainesville, a local real estate, residential real estate team. There's a number of the members of my team in the audience because I make them come to these meetings.
I come voluntarily.
That's right. But my focus is predominantly on being the real estate agent of choice for both, homeowners as well as investors in the Gainesville, Western Prince William County area. But my focus, I live in Gainesville. I own a bunch of rental properties in Gainesville and Bristow. So this is kind of where I focus. The reason I run this group is to just expand my relationships, to get to know all of you, find folks better, and be in relationship with more people, be a resource for you, and hopefully be able to put deals together and work with you guys. What do we want to accomplish with you? I just said it. How to connect with us. The easiest way to connect with me, well, one, I did bring some business cards. I always forget my business cards. It's pretty bad. But I did bring them tonight, so I'd be happy to hand those out afterwards. But also just friend me on Facebook. I do a lot of posting on Facebook. This meeting is being streamed live on Facebook as we speak. So everybody wave at camera. I'm just kidding. So if you're not able to make it, if you still want to tune in, friend me on Facebook, and you can kind of watch these streams and subsequent ones. What about getting in contact with you, Stefan? Is there a way that would be best for folks to do it, or you hand out business cards at the end? What would be?
I have business cards. If anyone wants to talk to me more, they can get my number.
Cool. Yeah. So let's shift the focus from the front of the room to you guys. 30-second elevator pitch, answering as many of these questions as you can or feel comfortable doing. If you don't mind, we're going to start the front here and we'll just work our way back.
Cool. My name is Adisa Almayu. I am a brand new investor. Never done this. I got interested in it pretty much since I was a kid, playing Monopoly. But then also when I was a kid, my parents kind of saved up and trying to build their real estate portfolio back in Ethiopia. Now they own about 5 properties and they retired, and I've always kind of seen that and wanted to see how that worked.
5 properties in Ethiopia.
In Ethiopia, yes.
Very cool.
Yeah, and so that got me interested. What I'm hoping to learn is network, kind of build my network since I'm new to the industry. I was a software developer before and was in recruiting before, so this is new to me, so I want to develop that network, meet new people, gain experience, and I do want to learn quite a bit. I love learning and like throwing myself into situations, so that's what I like to get out, and then maybe get some different opportunities, mentoring opportunities to work with people.
Very cool. You mentioned Monopoly. One of the gentlemen who's sometimes in this room, but I don't happen to see today, is a guy who lives in Haymarket, Virginia. He hosts a cash flow quadrant game like the first Monday of every month up in Reston, just for people to like come out and get that experience, play that game, and so on and so forth. So anyway, we can get you connected with Brandon about that as well. Sorry, if that's of any interest. All right.
So my name is my wife Nell. This is my wife Jocelyn. We currently have a townhouse, and eventually we are interested in renting it out. We'll move somewhere else. And then also we are interested in eventually establishing affordable housing, especially for those that are low income. So as far as what we want to learn, I actually listened to a book this year about BRRRR. So I'm very interested in learning more about the best way to do it, without losing money. So that's it. And all of you all, and getting a chance to network would be great.
Thanks for coming back, Mike.
I got an affordable housing story that has BRRRR, so we'll talk about
All right.
that.
Yes. Make sure we cover that. Anything you want to add, Jocelyn?
No, hi, happy to be here. Hello, everyone. I'm here in support of my husband.
Perfect.
I'm Danny. I spoke last month. Had a lot of fun with that one. My family will not play Monopoly with me.
It's too good.
Yeah, it's ruthless. No, I'm just here to support Stefan. I love the relationship aspect of all this stuff, so I do a ton of investing, a lot of development. I'm a foreclosure specialist, so I get a different aspect that 99% of people don't get to see, so it's a lot of fun to see what's new out there and always look and learn.
Danny's got some really interesting stories. Tell you what, like the plethora of interesting stories, including getting rid of pigs and goats off of properties. Anyway, we'll go back up here. Yes.
I'm Erin Edwards. I came in May for the first time on Learning New. During the day, I'm the Director of Finance and Operations for a private school, but I love real estate. I want to become a real estate investor. I have a son in the Army, stationed in Germany. He has a heavy construction background. He's coming back to the States, so my job right now is to learn everything I can. He's already sending me a bazillion things in the middle of the night, my time, to be working on, so I just want to learn as much as I can.
Cool. So mom and son kind of doing a tag team business plan once he gets back. That's great. Really cool.
Brother and sister too, but mom and son obsessed.
Very cool.
Andrew Haran, with my wife Diane. We currently own a townhouse in Burke that we started out living in and now we rent out. We're interested in just about any aspect. We're ready to get started and ready to move on. So whether it's flips, it's buy and hold, it's rentals, whatever it is, I think we're ready to get going. Here I'm just hoping to learn anything I can. I've done a lot of research myself, listened to all the podcasts and read the books. So that's second to learning from people who are actually face to face doing it day in, day out. So I just hope to get to know everybody here and hopefully work together.
Yeah, perfect. Thank you.
I'm Diane. Don't really have anything to add. Pretty much covered it.
Thank you for coming back.
My name is Vasily. I'm a newer real estate agent, and I'm very happy to be a part of a Mint team. And any opportunity I get to learn something from Stefan, I got an invitation, so here I am.
That's great. I appreciate it.
He teaches skating
Yeah,
to professionals.
yeah.
So, yeah.
What kind of
Ice
skating?
dancing.
Ice dancing kind of? Oh, very cool.
And ice hockey.
So ice skating at the high level. Very cool. All right, in the back.
Hi guys, my name's Ayub. Sorry, I'm a little late. I'm just joining in on, not a realtor, trying to get into the investing end completely. So wholesaling and flipping. Going to be doing a little more wholesaling at first, so just trying to meet and know everybody in the community, establish those relationships, try to help each other grow. But been looking into it for the past year. Kind of finally kind of took that leap and jumped into it full time. My background, I'm a finance manager for Kia at a Kia dealership. So I have a good amount of kind of that soft skill where I'm dealing with people, front end, but dealing with paperwork, kind of that whole hassle of calling people and building those relationships, building that rapport. But yeah, I mean, I don't really have much to add to it, but I'm part of some other groups too that I try to learn from. But excited to be here.
Thanks for coming.
Yeah, absolutely. Thank you.
Hi, I'm Rebecca, and I'm here supporting my big brother, Matthew.
Tiny sister.
So he might not force them to come, but he forces me to come. Yeah. No, I obviously watching Matt and Beth build their team, it's something inspiring, and so I would love to be able to do that. I did just break into real estate, not investing, but as my first home, I was able to buy. And as far as what my background is I am an estate planning attorney, and so in addition to kind of building real estate, once you own homes, if there's any way I can help you make sure that those homes are protected and saved for your family and not creditors, and any sort of planning in that regard, love to do it. Also, if you happen to come into real estate through inheritance, and sometimes that's the big shock, to make sure that kind of maximize that transfer. I do a lot of estate administration, so that's what I do here.
If we have time tonight, we will talk about one of the most incredible things that I've seen for saving on taxes, and there's a piece of that you could probably help people with.
Perfect.
So, yeah, let's hit that for sure.
Very good. I'm Shannon, and we recently moved to the Manassas area. We were 17 years in Stafford and 7 years in Woodbridge. And our friend introduced us to BRRRR on a piece of paper, tried to explain it to us, and encouraged us to go buy something. So we did in Manassas, and then he died.
Oh.
And I got the book and I read the book earlier this year. And then I kind of just determined to try to figure it out, since he was so excited to share it, and a little nervous, so interested in trying creative financing. But anyways, our single family home in Manassas, we are operating as an MTR right now.
Okay.
We are house hacking it.
Very cool.
So we have a nurse there now.
You're house hacking midterm rental.
Yeah.
That's great. Yeah. That's great. Dan, you're speaking Dan's
I
language.
know, you're a little more sophisticated than you let on.
Okay.
Well, I'm Tom. I'm here to support her because if she doesn't make it, then we don't make it. That's not true, because I have the W-2, but that's okay. Yeah, I think we want to, just like everybody has said, networking is probably the best thing for this type of group to, or at least this type of mentality to just go and, because you can't get anywhere without other people. You can't do it alone. So
Yeah. It's not what you know, it's who you know in most cases, so for sure. Good to meet you. In the back.
Hey everybody, I'm Tyler. I am part of CAZA Gainesville's real estate family. I'm looking forward to meeting each and every one of you. I too just bought my very first house in Spotsy. I am CAZA's southernmost agent. I grew up in Stafford. Know all about the Stafford area, and obviously I just bought a house in Spotsy. So looking to...
Well, no, Knoxville might have a little bit south.
That's true. At least in Virginia. Yeah. I eventually want to rent that out to travel nurses, and if not else, just long-term rentals, but just looking to learn as much as I can and get better at my business.
For sure. Awesome.
Hello, everyone. I was the guy who was helping you sign in.
And if you didn't sign in, please sign in.
Yeah, if you didn't sign in, please sign in before you leave. My name is Daniel Knight. I'm an agent with Matt on his team. My life completely changed when I started doing business with Matt Megel. Real estate has allowed me to, I guess in the first year, double, then the next year triple, then the next year quadruple my income. So I am very on board with everything that he is involved with. I do believe that the network is your net worth in a lot of ways, so I am here to meet as many people as I can. Last time I learned a great deal from the other Dan in the room, and I've already been starting to implement that to good effect. So what I do is I work with especially newer investors who need help navigating the complexities of investing and navigating through their transactions. And right now what I'm looking for is I am trying to get better at analyzing properties. I've built my own calculator spreadsheet that I'm using, but I'm curious to see what resources you all are using when you're running the math on your properties. Because obviously I'm humble enough to know that others are probably doing some things better than I am. And I would like to know what those things are.
And you, at times past, I'm just trying to jog your memory, we're also looking for wholesalers or to get on wholesalers. Is that still something you're interested in?
I'm always interested in building my wholesaler network. I do have a decent sized list now where I've got a decent flow. But also I have a podcast. If you would like to be interviewed on a podcast, get some exposure out to my people, I send it out to about 2,000 folks and who are local to this area, so that might be helpful. I mean, there's a million things I could pitch, but my pitch today was the whole calculator analysis thing.
All right, real quick, some important legal stuff's already mentioned. Do your own due diligence. We're not attorneys, tax advisors, appraisers, blah, blah, blah. There is a camera running in the back. I might take all of your picture right now, so cover your face, because I'm going to be doing some promotions. Cheese, yeah, cheese, yeah. Okay, good. You're just opted in by being here to our photography notice for filming. Before we get into this, though, Stefan, if we can start with you, unlimited time, but your story. Like, as if someone says, "Hey, Stefan, what's your story?" What's your answer to that? I'd love to just have you have an open slate, like slate.
The cool thing is that I think people come to stuff like this because they want to learn something more. They feel like they're missing to get to where they need to be. And I think it's awesome to come to stuff like this. But everybody here already knows what they need to know to get to their financial goals, as long as it's not like you want to be a billionaire or something like that. And my story, it relates to that, because I started out when I was 18, I graduated, and my parents didn't help me in like the sense of like, hey, we got to get you into college, we're going to pay for college, or even talk about going to college. So I graduated, I started going to community college, I started working at a mortgage brokerage as a receptionist, and I was, over the summers, I was working like 80, 90, even 100 hours sometimes, just to get overtime and save up. And in that process, I was searching what I wanted to do. I was reading books. I stumbled across something about Warren Buffett, and I thought, I want to be an investor. Back when I had like $200 in my account. And so then I was like, do I want to do business? Do I want to do real estate? Do I want to do stocks? And I settled on real estate because it's so inefficient. You see this probably as an agent. It's like, depending on how good the agent is, you can have a house sell for $50,000 difference. That's insane. And in the stock market, I feel like you don't have that edge. You're competing against billionaires. You're competing against people that can make trades faster than you can. There's all these things that something ridiculous like 70% of the retail market loses money in the stock market. But when you look at real estate, I heard a statistic, actually I think Andrew Carnegie said this, it's like 90% of millionaires made their money from real estate. And I don't know if that stat is still true, but some piece of that is still true. And so it's just go where it's easy. And so if anybody has been in this area for 10 years, 20 years, 30 years, 40 years, then you know what I'm talking about. You go back to somebody that bought 20 years ago, and they could have just messed everything up. I live by Tyson's Corner. If you talk to one of my neighbors, this guy Don, they've lived in their house for over 20 years. he could have overpaid, could have gone and paid 20% more than market value, done a terrible job negotiating, not done a home inspection, had a leaky roof. If he just lived there and slept there, how much money do you think he would have made? That's a lot. Yeah, at least double, at least. And the thing is, that's true if you go back 10 or 20 or 30 or 40. It's like, I don't try to predict the market, but at this point, I'm like, it's a question of when, not if, the property's double in value. So if you want to make $1 million, then how many houses do you need to have that double in value to get there? If you want to make $2 million, it's easy math. And you look like a genius. The guy who, if you overpaid by 20%, and you talk to him now, people are like, wow, like, how, you have $1 million in equity. And so that's what I mean by you already know what you need to do. What happens is there's a psychology that holds people back. People have anxiety, they have fear. And this pursuit of extreme comfort leads to decline. I mean, in everything. It's I think people age faster when they go for extreme comfort. Their finances start to die. It's on the other side of discomfort is everything that you want. So know that when you feel that feeling, it doesn't mean stop. It means pay attention, this is important. So go buy that house and just be patient. Now, if you do some of the sophisticated stuff that he's teaching here, then guess what? You can get there a lot faster. And there's some exciting ways to do that, and it's fun, but you have to be okay with being uncomfortable. I mean, everybody knows this, because we're saying, hey, I want to get fit, right? You're not gonna say, why don't you just take it easy? You know, you're like, go run. And I'm running, and I'm like, oh, I don't know. My stomach doesn't feel good, and my legs are starting to hurt. That means I should stop, right? No. Go push as much as you can. Go to the discomfort as much as you can. So my story is, decided I want to be an investor. I'm working the front desk. I'm taking classes at community college. And I start helping with payroll. And the loan officers are there are making 100, 200. One person's making 400,000 a year, which from someone that had previously worked minimum wage jobs back when I was like 16, that's like an insane amount of money to me. And so I thought, this is what I want to do. And I was so naive. I was like, what college degree do I need to be a loan officer? So I started interviewing the people. First person comes down, I'm like, hey, do you mind me asking, like, what kind of degree did you get to do this? And he's like, oh, I don't have a degree. I used to sell cars. I'm like, wow, he's so lucky. The next person used to attend bar, no college degree. And the last person sold cotton candy at carnivals. And I was like, this is what I'm doing.
So, cotton candy.
I worked. And they gave me a shot to be a loan officer. And you know, it paid well, but it was a soul-sucking experience because they charged a lot of points. I mean, we're talking like, you know, 5 points upfront. This was like a second mortgage. It was extremely expensive rates. And it just felt predatory. So I learned in that job a lot about sales. I learned a lot about myself because for me, it's not just about making money. It's about adding value. I want to feel good about what I'm doing. And I think that's a key of getting wealthy is just helping people. Like you're sitting here helping people and it's going to benefit you. And that's the beautiful thing about making money is the more you can help people, the more you also get. So anyway, because I was a loan officer, the people there helped me buy my first house. I was 19 years old, didn't know what I was doing. And again, this is why you don't need to know more. If you learn more, it's great. But I went out to see 2 houses. It's probably the easiest client that agent ever had. And the second house, he's like, you know, this couple's getting a divorce. You can probably get a little bit of a deal on it. Why don't you buy this one? I said, sure. So we buy it. He told me what price to offer. And we closed on it. And between the timing of the market and the discount I got, within 6 months, I had made $50,000. And I thought, I just slept in this house. I made $50,000. And here I am killing myself at work. So that was it. I was like reading everything I could on real estate. I stopped being a loan officer and just started doing like knocking on doors and like, I got so many, I mean, when you're like 19 years old and you're knocking on someone's door and saying, you know, I heard you're in foreclosure, you need some help. And they're like, yeah, but you can't help me. but you know what? It was uncomfortable, but I just did it. And I started buying houses and started going up in value. And back then, you could get a loan if you had a pulse. Remember these stated income, no doc loans? I mean, it sounds crazy now, but you literally could. So I just bought a bunch of houses. And then the market crashed. And I had a bunch of employees, and I lost everything. I just held on to it. It was just hard. My mom was sick at the time. I just went into a funk. But here's the great thing, is that when I finally came out of that, I was able to make it back so much faster because the knowledge that I had learned over that time period was super helpful. And it was actually at a grid event that really also changed my life. Because then I went on and did some other stuff, and I did a partnership with some people that were the wrong partners. And I got stuck with the renovation. I wasn't supposed to be doing the renovation side. And I had to take it over. And I think I had like 23 projects at one time. And yeah, and I was speaking at a grid event, and one of the other guys who was a pro there was like just chatting with me. He's like, "How many projects you got?" I was like, 23. And he goes, "Oh my God, that's a Brandon." And I thought, yeah. And so after that, then I went to the agent side. And it is a lot better helping people do it. I like that piece a lot more, and I don't have to do all the details. And so it makes less per transaction, because you can make a lot just doing 3-4 deals a year. But I like the volume. I like the creativity. I want to do more design. I want to do more of that. So I can do more of that. I don't care that it would make less if I just did some really sweet deals. And Dana and I still do stuff. So Dana and I actually met on the agent side. And we started just a tiny little company. I had an IRA that I had just gone to a seminar, and I had just been putting money in there. I don't know stocks, so I don't invest in it. 35K, never invested, not even got interest. I mean, that's like embarrassing. And they said, you should do something with your IRA. And then he's like, I want to invest in real estate. I said, let's do this together. We did the 35 each, and now we're like a 7-figure company. And we just, I mean, you can, well, my point is it doesn't take much money to start out. And we just did those principles. And we have some other tricks of the trade that we'll share, but that's how simple it is.
I want to, before we go into some of the buy and hold stuff, I want to go back to one thing that you said. After the crash, and just the funk and losing a bunch of stuff and basically starting over, I'm putting words in your mouth, but I would imagine that that's pretty much what happened. I heard the story enough times from other people, of course, I'm going to make that inference. You said it was able to kind of do it again. It was easier to do it again a second time. My question is, like, was it easier to do it again also because I failed? I felt what that felt like. It wasn't that bad. I didn't die. I'm still here. And so, like, I got to the worst case scenario, and now I'm free to go.
I think that's actually really wise. So I have a different kind of definition of failure. I believe that I heard this quote before, is that success comes from making the right decisions. The right decisions comes from experience. You get experience when you try and it doesn't work. People rarely stop to take stock of what's going on when things are winning, which is part of what happened to me. I was winning left and right because the market was like, you could buy a house and leave it vacant, and you'd be making $5,000 or $10,000 a month on appreciation back then. So you could make a lot of mistakes and not be efficient and not be paying attention.
Yeah.
And when it crashed, then you take a hard look. Wait a minute, what could I have done? And now, if I was in that situation, I would come out of it smooth.
Right.
But it wasn't until I was able to sit and reflect on that. Yeah. So I don't think that's failure. I think that's part of the anxiety thing. People are like, I'm gonna fail. Only fail if you stop. The people in the Hall of Fame have struck out more than the people that never make it.
Yeah, for sure. Yeah. It is funny, I think I said this when we had Chris Craddock, who came and was one of our guests as well, and he had a similar experience, I'm sure you probably know. And it was like, if you're like between 40 and 55 years old, and you've been in real estate since before 2005, like the stories are the same. Like everybody did kind of like stuck their foot in the same pile of crap. And if you're still in, then you've got all of the benefit of that learning of that whole thing. And so many of that I know now are just crushing it in what they do. So it's funny how that similarity holds true. All right, Shifting directions just a little bit. Thank you very much, Stefan, for sharing your story. It's awesome. I appreciate that, and I'm going to certainly be asking you I'm asking you some more questions and having you share some of the stories that you promised these fine folks as well. But let's just real quick kind of go through some buy and hold information. Okay, so we say that this is for regardless of your particular investing acumen, from the incredibly successful tenured investor to the brand new investor. What's a buy and hold? In essence, a buy and hold is a income property, a rental property. There's lots of different terms, but it's a property that you purchase with the point of having somebody else pay it off, if it's not already paid off, pay it off, and then earn ongoing reoccurring revenue from. Okay, simply enough. That's what I've just covered there. The considerations for a buy and hold, property different from fix and flip, but several issues are the same. So a fix and flip is obviously something that you're trying to turn pretty quickly. You want to buy it, renovate it, put it back on the market, get the profit from that activity. The buy and hold is a longer term play. So how much the things that you're kind of considering between doing a fix and flip or buying a long term asset like a rental property is how much free cash. What is your long term strategy? What's your tolerance for risk? What's your tolerance for dealing with rehabs, contractors, tenants, yada yada yada. So there's lots of things to kind of consider. But the biggest difference that we're always trying to help people understand is there's this overarching term of real estate investing. And everything kind of gets thrown into this term. But for me, there's kind of like two different sides, and I'm sure challenge anything I say, Stefan. I want some alternative ideas if you're like, well, think about it this way too, please. But there's two different sides of the real estate investing. There's the active investing, which is designed to make big chunks of money and more of an active income type of scenario, fix and flip and things like that would tend to fall in that. And then there's like the long-term kind of more what would line up with like the idea of investing like a Warren Buffett or other people where you're putting your money into something for a much longer term kind of play. That's more the buy and hold type of thing. Anything you would add to that? It's
I love
simplified analysis.
The previous slide. You see how he kept saying tolerance?
Yeah.
Like you have 100% control of this. And this is something that, again, it's not, the feeling may not be there, but your action is what controls the result. So if you just say, hey, I'm just gonna do it, you'll start to feel, your tolerance will increase. And this is really key to this. This is the biggest reason people don't do it.
It's the gym analogy, right? When you get into the gym for the first time, it's like, man, this is really hard. I can only do so much. The more you kind of take action, the more that weight gets lighter and lighter, and you can increase your tolerance for risk or tolerance for other things. But also, you in your story were like, I realized when working in the second mortgage lending business, this is a soul-sucking thing. Like, I just don't even want to be doing this. So knowing what you love and what you like and what lights you up and gives you energy as opposed to taking energy from you is really important too. And just looking at these different ways of kind of having real estate be a tool for wealth building. Anything to add to that?
I think it's great.
Perfect. I don't think there was anything else on this slide, right? So these are some questions you should just, if we're talking about buying and holding, these are some questions to ask yourself, ask your spouse, be on the same page with. We should do a whole grid meeting about like husband and wife dynamics in real estate investing. That'd be interesting. But, where do you want to hold and own rental properties? How long do you intend to keep? What's your horizon? What's your retirement timing? All that kinds of stuff. Are you going to manage the properties yourself? What if you had 10 or more? Are you going to manage all those? Are you going to hire somebody else? Are you going to start a property management business yourself? I know plenty of investors who started a property management business because they were managing so many of their own properties. Like, good, I can do this. I should do it for other people. What rate of return do you expect to get from these investments? What rate of appreciation? One of the things I've said in the past is, and I think I mentioned this when Danny, you were sharing, and I'd love, Stefan, your thought process on this is, I think of buy and hold properties as on a spectrum. This may seem a little bit too linear or too binary as opposed to, more dynamic, but on a spectrum of really high cash flow, but potentially and most likely lower appreciation compared to maybe lower cash flow, but the upside is really on the appreciation. And I kind of look at that as a little bit of the spectrum and decide where I like to kind of play. I've got people that really go hard into the cash flow standpoint, and that's great. They're bringing more money in than people that are on the appreciation standpoint, but maybe also bringing in other negatives that they are okay with. It lines up with what they're willing to deal with. Other people maybe are like, dude, I don't need to make that much money. I see my property values and my net worth sheet like going up and up and up. They're paying for themselves. I'm not making much cash flow, but there's other, and there's no right answer, right? But you should know kind of what you are comfortable with, what your angle is. Thoughts on that?
I think that's very wise. And which one do you think will make you wealthy? If you could have a crystal ball and predict which, you have a property that would, I'll appreciate, but cash flow is not great, or you have great cash flow, but appreciation is not.
Volunteers from the audience, what's your guess?
Appreciation.
Appreciation?
Yeah.
Actually, hold on, we'll do the hands up, okay. If you're going,
They already answered. I tricked you.
Alright, we're gonna go cash flow. Who thinks cash flow leads to long-term wealth building better cash flow? Appreciation? Alright, everybody's appreciation.
So I think there is a connection.
I was
There's
gonna-
some rare,
You're wrong.
there's some rare situations where you can get both. But
Yeah.
for the most part, you see things like Baltimore.
Yeah.
Like people are like, oh, I can go buy a house for like 25,000, and the cash flow looks really good. But or Cumberland, Rob and I did
Yeah.
stuff in Cumberland. But the appreciation is just not there. Or you do something like Arlington, you buy a house, appreciation historically has been great, but cash flow is not great. And the cash flow, it's so much easier if you won the lottery and suddenly you had $10 million, you could create the cash flow like that in a couple months. If you have a really high cash flow, it's hard to build a net worth off that. I mean, you can eventually. So I'm not putting down cash flow. If you can get it, great. But if you made $10,000 a month, which is a really good cash flow, that's $100,000 a year. That's 10 years to make $1 million. If you had the $1 million, we could do that in a month.
Yeah, it's a really interesting point. You know, when you were just saying that, I'm like, if you have $10 million to quote unquote monetize that or cash flow that, you can go to a bank, buy a product, and they will pay you. Like, you know, like as simple as an annuity if you wanted to do that. I'm not saying you want to or it's the best return, but it's easy.
House is cash.
Yeah.
You're good.
On the other side, you have this higher cash flow. There's almost another step you need to take to make it a higher net worth. Like it just, you know, you still have to go buy the asset. You still have to go, you know, do another step in order to kind of turn it into a net worth.
And you gotta wait.
Yeah.
So
Yeah.
yeah, and
So to that point, like almost if everyone's got different goals, and we're not necessarily saying that, you know, some people need the cash flow, just do the cash flow thing, right? Dude, I don't care about net worth. I just want to have nothing to worry about on a monthly basis, and when I die, it'll be somebody else's. Like, that's fine. But if you focus on the other side, you get both long term.
yeah, and there's a healthy balance. They
Yes.
work together because
Yeah.
if you just keep buying property that has negative cash flow, well, guess what? You're not gonna hold it for 10 years because you'll be yeah. So it's a combination of both. But I like to focus on the net worth side.
Appreciation, so that's cash flow is defense.
Yeah. Yeah.
Yeah, and you have to be able to hold on to it. That's
Yeah, I too. When I look at that spectrum, you know, I tend to be at about 70. If 100% appreciation and 0% is cash flow, I tend to be at like that 70. It feels good for me. It's not crazy high cash flow, but it's enough to kind of make it pay for itself. That I tend to fall into that, just in my personal preference as well. Just anyway.
Yeah, we cast a wide net. Danny and I, we cast a wide net because think about how many deals are out there. I mean, you know how hot the market is. It's like if you're saying no because you're like, hey, we had an agent in our office who wanted to invest and said, you know, I don't buy houses that have basements. And I was like, that is the craziest thing I've ever heard. Because you have maybe 1% of the deals that are actually deals. And he's probably eliminated a big chunk of them. So, you know, we do stuff in DC. We got something going on in Oaksville now. I mean, it's just a wide net. We'll do condos, we'll do townhouses.
Yeah.
It's a wide net. So I won't say no to cash flow. I won't say no to a good deal that has equity. Both.
If the spreadsheet works,
Yeah.
let's do it. Let's make it work. Yeah. Okay. Perfect. Renovate, buy, whole property. We prefer. Oh, so this is kind of just talking about like this renovate. Excuse me. This long-term rentals tend to be easiest, and every geographic area can be a little bit different. There's all sorts of other disclaimers I can throw out there, but like in kind of we call it like the bread and butter, like the 3-bedroom, 2-bath townhouse in an area with good schools. Are there other things you can do? Yes, cast a giant wide net. There's all sorts of opportunities out here. But for maybe new investors that are trying to kind of cut their teeth, like there is kind of a.
There's a danger here.
Tell me.
Well, like Baltimore. People, someone told me.
Oh, so yeah, you're talking about the very low end properties
Yeah.
that attract trouble, yeah.
Baltimore is where investors go to die, is what I've heard. and people make money in Baltimore, but they have a very specific model. But the reason this is dangerous is a lot of invisible cost. You know, there's places where you can spend more renovating a house than the house is worth. You don't want to be there. And so, yeah, the low end stuff is more dangerous. Now that doesn't mean like you find a $100,000 condo in like Sterling, I would do that. But not Baltimore, not that kind of stuff.
Buy the least attractive house in a great neighborhood, as opposed to the most attractive house in the neighborhood that's not, yeah. And on the flip side, in the very low end properties, he talked about that. The very high end properties are really hard to kind of make the cash flow numbers work, right? You can buy great falls stuff. It's hard to get a renter that's going to make that number make much sense, right? So in between those two ends of the spectrum tends to be where the majority of the buy and hold type of business lives, right? So, and that's definitely my portfolio. Go ahead.
I agree with this 100%. I think that the high-end property play is if you're going to, as you get more wealthy, you want to get a nice property to live in, there's definitely a market for that. You tell Matt, like, hey, you find a deal on like a Great Falls place, because it's so much easier to just discount $100,000 off a $1 million or $2 million property than if you're trying to buy a $100,000 condo and trying to get $50,000 off.
Yeah.
So live in if you find a good deal on an expensive property, live there, and then after 2 years, you sell it, and you can make $250 or up to $500 if you're married, tax-free.
Yeah.
If it's your primary residence. And again, not a tax professional, so you deal with a tax professional.
Yeah.
But that's incredible. That's an incredible way to build wealth. So buy those to live in, don't rent them.
Yeah, 100%. Okay, what are the kinds of things you're doing? You acquire these properties, let's say in that bread and butter neighborhood. How are you renovating them with a lot of money, or are you kind of doing minimal as possible? The answer tends to be like towards the minimal side, right? We're not putting a new kitchen in, we're painting the cabinets. We're not, flipping the countertops. Maybe we'll put some butcher block if it's really, like just trying to kind of minimize the initial outlay, because it doesn't really impact your rental income as much as your cash flow out, right? Like you put a $50,000 renovation on the house, you might rent that property for an extra $300, $400, like you do the math on how long it takes to get that money back. Like, no, let's put some good money in, polish the penny, and let the rental market, and maybe we're gonna even rent it for less, but still, your net, it's gonna be probably a better outcome. What's y'all's strategy in terms of renovation level for rental properties?
I think Danny's actually better at this than I am. He's good at like going in and doing kind of just enough. And I tend to like
Like beautiful things.
I love create like works of art, creative stuff. Like I love that. And so, yeah, and that's part of why we're really good partners, is that we have different skill sets.
Yeah.
And so I can do it. It's just painful for me to go like paint cabinets when I'm like, oh, we could totally, like even looking at that picture, I'm like, oh, we could totally do some cool stuff there. But yeah, I mean, you're right. This is the way to do it. This is the way to do it.
Yeah. One exception is if the place needs a full renovation, right? So you're already like, hey, this house, like it is not functional and it needs a full renovation. Then the incremental cost above the cheapest possible stuff and something that's maybe just a little nicer, that does tend to make sense. But that's after you've decided this just doesn't even work. Like we have to do something here. Anything you'd add to that?
No, I think
like the difference between a stainless steel appliance and a black appliance is 10-20% or something like that. Like you can buy the nicer stuff, and the difference between the rent, you may actually be able to get a slightly better rental quality tenant or a longer lasting tenant, or charge a little bit more for that incremental cost.
Danny, can you keep notes about this, please? Not right, stainless.
Got it, man. Property management. Information for you guys. Third party managers will typically cost between 8 and 10%, especially if they're only doing 1 or 2 properties. You get a portfolio and you're like, hey, I'm gonna bring you 10, 15 properties. You might be able to negotiate a little bit south of that 8%, but typically not much. This is how their businesses operate. Plus, either a half month's rent or a full month's rent at the time that they're going to be placing a new tenant in there for the marketing and all that kinds of stuff that needs to happen. Project manager can and should handle the marketing, the credit background checks, rent collection. There's an interesting fair housing dynamic that you gotta kind of be aware of, and I'd love to know if you guys have ever come across this. but like, fair housing laws are great laws that protect people to having access to good houses in great areas and so on and so forth, and I think they're really important. And as somebody who's trying to have the best tenant in their property, you need to be careful to make sure you're in compliance with said fair housing laws, because there are actually people out there that try to sue folks, meaning go put in applications knowing that they're going to potentially be discriminated on because it's an income source for them to be able to say, hey, you looked at my last name and my last name gave the impression that I would, and I'm going to, sue based on that. So really be in compliance with it because it's the right thing to do and it will protect yourself as well. One of the things that the property managers can really help with is if that's something that you're like, I don't even want to be dealing with it, the property manager will give you the credit check. They won't give you the name, so you don't even have the ability to try and use a name to decipher anything that could potentially be a fair housing violation. Credit check, the background check, the past landlord's, what's it called, references, things like that, and you just kind of make a decision in an arm's length transaction based on just the numbers, and you're safe, right? So anything about, I know I'm going down a little bit rabbit hole, fair housing stuff to be mindful of?
I think there's you're tapping into something that also is really important, is that a lot of investors, they think, okay, I'm gonna go do everything. They buy a house, they're out there painting it. And I always tell people, I'm like, if you wanna make money as a painter, I got tons of houses. Like, $15 an hour, show up on Saturday. Nobody wants that. So don't do everything. I mean, you know what has to be done. I'm always trying to fire myself from everything I can. So if you don't like managing properties, I've yet to meet somebody who does, then get somebody on your team who can do that for you.
Yeah.
There's no need to have to go do everything. Matter of fact, the people that are the most successful don't go do everything. It's not like, they're not doing the whole pie. They're not doing the construction and the agent side and the property management. I mean, you can be successful doing that, but it's probably the hardest way. Because again, the mindset is like, if you go, Danny and I can do a lot more together because we have opposite strengths. And that is what you want to do, is build a team.
Yeah, I find myself getting trapped. I'll grab you in a second, Dan. I find myself falling into that trap too, dude. Like,
I have a house you can paint tomorrow.
No, I don't. But just like, the tenant calls and I'm like, wow, maybe I can just go hand. I'm like, dude, just freaking call it handyman. But I got it. No, so it's a good point. I needed to hear that because I do fall into that trap myself. Dan.
So even if you do plan on doing certain things yourself, like self-managing, you should add several people to your Rolodex who fill that role, because when you inevitably run into a problem that you don't know how to solve, it's so much better on your mental health to be one phone call away from the solution.
Yeah, for sure.
And also, when you get enough doors, which is how property managers talk, it's about like, if you have a multi-unit that has like a duplex, that's 2 doors. Each unit is a door. When you get enough doors, this can drop dramatically. You can get down to like a flat rate where it's like insane. This goes way down. So get to that point. Even if you're going to manage it yourself, get to that point, and then there's no reason to manage your own stuff.
A good PM should send you detailed monthly reports of income, expenses, keep rents at or just below the market rates to encourage renewals, less vacancy. So this is something that we've used, and it seems a little counterintuitive, but I've helped so many of my clients avoid unnecessary pain by saying, look, if you could charge $2,500 for your rental property, and that's like the last guy that rented the exact same thing, that was the high water mark, and so he did it, you can do it. Rent yours for $2,350, rent it for $2,400 or something like that, just a little bit lower than what you can, and trust me, you will make more money than if you rented it for $2,500. Sounds a little bit backwards, but all you need is 1 month of vacancy, and that $100 difference, you just lost it completely, and for 2 years, 2 years worth of it, you just lost in 1 month.
I've got a great example of that, where there's a landlord client of mine who, God love him, he wants the top dollar, so I get him the top dollar rent every time, every year. Let me say that again so it sinks in. Every year, I get him that top dollar when I turn over his property.
Yeah, exactly. So, but if you do it just a little bit less, your tenants call you less, they feel like they're getting a deal. They can go on to Zillow and see what the other rental properties just kind of went for in the neighborhood too. They know where they'll stack up compared to somebody else. So they call you less, they're appreciative. When the lease comes due, comes up for renewal, they're ready to renew. One other little quick tip, and then Dan, I'd love to hear you say, is if you have a rental property, I would highly encourage you, when you put a new tenant into that property, this is my tip, do what you want. Don't increase the rent after the first year. Go to the second year, and at the second year, just do a complete reevaluation of rents and explain to them that you've run that. The reason why I recommend not doing it in the first year is because if you do it in the first year, psychologically, you set your tenants onto this thought process that every year it's going to go up by blank amount of dollars. I just increased it 50. Okay, I just know for as long as I'm here, it's just going to go up $50 a month every single year, or $50 a month every single year. You get the idea. But if you wait 2 years, they're just less likely to know or feel like it's a certainty that it's going to go up. And then you say, hey man, taxes have gone up. I didn't increase the rent, for the first renewal, and I only do like 1 year leases every time. I'll just do 1 year as opposed to signing a 2 year lease or whatever. But I didn't increase the first time. The taxes have gone up. Kind of ran the comps, and once again, all the comps in the neighborhood have said that this guy was, let's say he was paying $2,600, and now all the rents are at $2,800. Hey, so I'm going to increase yours to $2,750. You have no problem jumping up $150. He can see what everything else is. You're still below that, and you can increase your rents both in a way that's keeping tenants longer and being able to kind of stay more in line with market expectations instead of setting this $50 or $100 a month and just see what happens. Anything you would add to that?
I think that's a good point. I think keep your tenants.
Yeah.
The cost of vacancy, the cost of having to paint it and carpet it, it's a lot.
Yeah. Danny.
Yeah, I mean, Steph doesn't know this, but I mean, I think we own like 15 doors together, and our average tenant stays for 4 years. He didn't know that because I managed it. But most of ours are slightly under market, and we did that, and I tell each one of them at the very beginning, I'm doing it under market, so you know that take care of my house. And when there is a problem, send me who you've talked to that's a licensed contractor, plumber, whatever it is, and you're gonna be taking off your rent. I just wanna see what the scope is first. I'll approve it, and then you handle it. And it's been working perfectly, so,
I would say just below market, and try the idea of waiting 2 years to raise your rent instead of doing it after the first year and see how well that works. I think it works really, really well. Okay, loan considerations. I don't really want to talk about this. Blah, 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 you gotta have more money down, you can't use funny loans if you're buying them you gotta buy them in your own name, build your brand, blah, 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 be authentic, make your mark. Hey, give us a BRRRR story from a low income thing like we talked about. Oh my god, that's just like crushing it. They didn't do that. That was a little aggressive.
So I've got 2 BRRRR stories.
Good.
I'll start with the most recent one, and then we'll talk about the biggest one. So I had a client actually that just refinanced last week on it. So they just BRRRR'd it. It was on F Street, and we get properties off the market. We get properties from sometimes from wholesalers. I have to look at like 100, 200 wholesale deals before I find a good one.
Can you just start for the folks that might not know what BRRRR is?
Yes.
Oh, sure. Yeah, so it stands for buy, renovate, refinance, repeat. Super simple.
And rent.
And rent.
That was in there.
Oh, okay. Maybe I made a different one. BRRRR.
Shoot, I thought it was in there. It's not even in here.
So,
Sorry.
but the concept is you don't have to memorize that. I mean, the concept makes sense, right? If you can buy something and then fix it up and add value to it, and you can get your money back out, then that's a very repeatable process. Mm-hmm. And that's how the same thing. It's like, how many do you need for them to double that you're just done? So this property was on F Street in D.C. They bought it for $400,000. I did the renovation for them. They spent $185,000 on the renovation. When the wholesale, you don't get to get inside of these things. And a lot of the houses we buy, we don't go look at, which I know shocks people, but that's okay. Yeah. And we didn't get to see this one, so I'm comfortable with that. But literally everything that could have been wrong was wrong with this. I mean, it was the worst structural house I've ever seen. I was literally in the addition, the back porch, and the guys are peeling the stuff off. And I start to look at it and I'm like, wait a minute, this entire thing is being held up by this little point here. It's not even full contact because they had put the 2x4 to slant and it was just sitting on it. And I thought, everybody get out of here immediately. And we had to basically take it down. They didn't even have proper footers, so we did that all. But everything in a house can be fixed. You know, we weren't budgeting 185 in the beginning. We fixed all that, and it came out to 185. But here's the cool thing. It appraised, and I might get these numbers as I go through these stores off a little bit, because I look at a lot of houses, but it's ballpark that. I think it appraised for either 775 or 765 when we were done. So they were able to pull out all of their money, their down payment, all the cash they had invested, including the renovations, and now they have like a free house, and they're positive cash flow. So how many of those can you do? Do as many as you can, and that's a good strategy for success.
So I'm speaking to my amazing sister in the back here. I'm gonna go just like a little more detail and like dumb it down even more, because we want to make sure you are on. So bought it at 400. Put 185 into it, we're at 585. Appraised it, let's just say 775. So the bank says, hey, we'll give you up to 70%. What did they say?
They got 75%.
Up to a 75% loan to value. So 75% of 775 is, which Virginia Tech, no luck, right? Okay, so let's say it's $600,000, whatever it might be. They're able to take their 585 back out in cash. Now I'm putting a loan on the property at 585, which is monthly payment, let's say, was it how?
542.
Okay. Anyway, so they take all
No,
of those.
70%?
That was 70. They actually did
75.
75. Yeah.
So
but
they take all their money back out, have a mortgage in its place now that's at X amount of dollars, and they're renting it for X plus $200. So they're getting this $200, but somebody's just paying this thing off. It's got $200,000 worth of equity in it, and they can go on and do it again. So like that's kind of the BRRRR idea, if that makes sense. Repeat is the next one. Yes, Omari.
So a question, for the purchase, do they get like a conventional loan or hard money lender, or do they just have the money?
I usually almost never do hard money. We get hard money on this because wholesalers don't want you to get it. They don't want the hassle of a conventional loan. So we just got in there and got out, and then they just refinanced it out because hard money is expensive. So they did get hard money. I financed the construction for them, and then now they just got they refinanced it. So.
Conventional bank, Fannie Mae.
It was actually a
DSCR.
yeah. That's what it was. So where they basically go off the income of the property, as opposed to like, there's some things that they looked at the borrower, but it was a lot based on the property.
The property, they looked at the property as its own business and gave a loan based on how that quote-unquote business would perform, so to speak.
Yeah, they bought this in an LLC.
Got it.
And that makes it a lot harder to get, your loan options are more limited.
And so they're doing a commercial product with a 5 or 10 year term?
I can't remember the term on it. It's
but it's something creative as opposed to 30-year fixed.
It is fixed, but I think it's like, I don't remember the term.
It depends. You can get a lot of different products out there. Sometimes there's like 10-year ARM options, 15-year ARM options. You can get fixed rates for longer than that. It just depends on who's providing the DSCR loans.
Cool. And the idea is they're going to refinance when rates go down sometime in the next 10 years. They'll refinance it. Right.
So would you say you should start off doing it in your personal name instead of an LLC?
So they did it in LLC because the hard money didn't want to lend to an individual because it's harder to foreclose. They wanted to loan to a company. And in DC, the transfer costs are so high. I mean, in Virginia, if you own the LLC and want to put in your name, they're like, all right, we're not going to charge you transfer fees. In DC, that's like a 3% fee you're going to pay, which is a lot of money. So they decided to keep it in the LLC's name and just do that.
So, I don't mean to go off track, but you said they wanted to loan to a company. Could you explain that, Diction?
Yeah, so like,
the hard money.
A lot of hard money lenders don't want to loan to an individual in their name.
Right.
Because then there can be tricky stuff like the person can move in, and it's a lot harder to foreclose on someone in a primary residence, and then there's like usury laws. It gets pretty complicated. If it's a business, the government's more like, you know, if you're lending to a business, there's a lot less protections.
Repossess the property. Yeah. It's fine to repossess the property in a business as opposed to an individual, especially in DC. I imagine it's compared to even other areas. Yeah. Come again?
It's on topic. Proceed.
Okay. All right. All right. So give us any other story, or I can go through some of this
Oh,
stuff.
I have
but-
another, yeah.
Yes.
So this is the biggest story. So the probably most profitable deal that I've ever found was it turned into affordable housing. So right now in DC, there's not enough Section 8 housing that's good quality Section 8. There's a lot of like slumlords doing Section 8. So when you have a 3 or 4 or 5 bedroom unit, I mean, you get so many applicants. And so you can kind of pick the creme de la creme. Now this program is changing now, but back then it was really easy because
When is then, for the most part?
this was like 2 years ago. So, and this was applied 6 months ago, but now just recently in July, they changed the rules and people are waiting to kind of see how that plays out. But you could rent a 5 bedroom in certain areas for just under $5,500 a month for a 5 bedroom. So, and that's like, there's no negotiating because the Section 8 tenants they're not paying, it's the government paying it. And so they're not coming in saying, hey, I want less money. It's coming from the government side. What they're looking for is a safe place to like raise their kids. And if it looks good, then they're super happy. And so I found a 4-unit on the market for $950. I helped with the design of it. So what we basically did is we took this 2-level, it actually had permits already, which was amazing. And we changed some of that stuff because the design wasn't great, but we allowed us to start building immediately. And we basically just went up and went down. So now we have 4 2-level condos that are each 5 bedroom. So that property, the gross rent, he stuck about $1 million into the construction. And by the way, he didn't come up with $1 million. There's a loans out there where like Sandy Spring, Eagle Bank, there's other ones too, that do these loans you put down 25% and they'll give you the money to purchase the rest and do the construction. So I think you needed like $300,000 to do the deal. So now you bought it for $950, put $1 million into it. Let's say it's around $2 million. So there's some other costs, but it's around there. The property appraised for like 3.2 million, something like that. So now when he refinanced, I remember this because I don't remember the exact appraisal, but they got an extra like $250,000 after getting all of their money back. They got like $250,000 cash to get the extra. And the property cash flow is positive cash flow by over $10,000. So I call that the one and done. And now we're in the process of selling that property. It's been less than 2 years. So we have a buyer who's willing to pay $3.3 million for that. So they're gonna make 7 figures in a very short period of time. Wow. So yeah, it's just pretty incredible. And guess what? The people, you talked about like wanting to provide affordable housing. You can do it and make money in those situations. There were several tenants that started weeping when they found out that they got the property because they're these big properties, everything's new. It's just so different than most of the housing there's some really gross Section 8 housing out there. And so now their kids are like in a safe place, they don't worry about like lead poisoning and all kinds of other stuff that happens in some of those houses.
Here's what's really cool about that, and this is kind of where you started all at the very beginning of tonight, is like, you know enough to kind of go start doing what you want to do. You don't have to have the money. You don't have to have the $1 million. There's products. You have to be the architect of the deal. You have to be able to see where there's a need, see where there's an opportunity, connect the dots and lines, find out what you lack, bring those people in. Like, Danny was saying earlier before we even started, just like, yeah, these pigs and these goats, they had to get off of this no property, whatever it is. He's like, dude, I just get on the phone and start calling people and figure out who's going to take pigs and goats. And we're all getting bacon, by the way. It's under your chair. But just start connecting those dots, and you don't have to necessarily be the money guy, have the thing. You just have to be able to put the pieces together.
It's even easier than that because you can do that for people. You don't have to even know how to do all that stuff. I mean, if you do, it's great. But like, you just have to know somebody to connect the dots. So like, you know people that are doing that right now. I mean, you do that for people probably every week.
That's Dan's primary business, is helping people connect those dots.
You just have to go do it. And you don't have to make $1 million on your first property. You just have to go get the property, and then just, I mean, we talked about buying your first house. You just keep it.
Yeah.
And you know, there's more sophisticated stuff, like sometimes it makes sense to sell. Like, if you're living there, and in a couple of years, you've made like $200,000, then it probably makes sense to sell your primary and go buy 2 more. My rule is that when we started out, that first house we bought, if we had just kept that, it was a great rental. If we had kept that, we'd be sitting here talking about our one amazing rental. Because we sold that and bought 2 more, and then the opportunity came to sell that and buy 2 more, that allowed us to magnify it. So our rule is like, we don't sell real estate unless we're gonna buy more. And so if you can get tax-free gains on your primary, that's great. So there's just, it's so easy to make money doing this. I mean, like literally, if you call Matt and say, hey, next time you find a good high-end deal, whatever that means for you, I'm not saying go buy a $2 million house, but if you're looking to live in a $750,000 or $1 million house, like, just be flexible. Where I'm living, actually Danny found the house that I'm living in. I lost out on this property in DC. I had lunch with Danny. He said, you should see this place in Falls Church. And later that day, like, signed the paperwork with Danny. and it worked out great. I mean, I think we found that property for like, what did I get that for? $850. It's now probably 1.7. So
2 years ago?
yeah, now we did some work to it for sure. But
You run a construction company.
yeah, but the really big thing that we did that made us most of the money is we slept there for 2 years. And the cool thing is when we sell it, because I'm married, we're gonna make $500,000 tax-free. Tax-free. Think about how long it takes to save up $500,000. Like, yeah.
Yeah. Let's spend just a little bit of time on this, and then we'll wrap up. Let me just see, I don't think there's anything beyond that I want to do. Yeah, let's just go back to this real quick. So we're trying to find a deal. You talked about Danny finding that thing in Falls Church and so on and so forth. For the most part, finding deals boils down to these 3 options, right? You can do all 3 of them. You can focus on one of them. You can take 2. It doesn't really matter. That's a little bit more personality-based kind of decisions, maybe even budgetarily-based decisions. But if you're looking for a house that you can buy, an investment opportunity for you to take advantage of, you can either be prospecting. Danny, you know anything about prospecting? All day long, calling lists that he has. He's got a whole pattern process, and just pick up the phone and stink and knock it out. It's the cheapest, probably most effective way to get your deal. Like, you can not have a deal today, and you can have a deal tomorrow. Danny put 2 deals under contract while he was in Scotland, both back here because he had done prospecting. Probably they were callbacks, I'm guessing. And then, yeah, he prospected before he left, and they called him back. Networking. Well, we're going to start here. But this is like just making sure that every circle that you go in your life, in your work, at your church, at your kids' soccer games, whatever it might be. Hey, I buy houses. I'm a real estate investor. If you know of anybody that needs to get rid of a property that they need a solution, or they got a problem with real estate, I'm a real estate solution person. Whatever you want to call yourself, but just making sure that everyone in your world knows, didn't I meet somebody who fixes real estate problems? Yes, me. Remember I gave you my card. Just kind of like, that's the networking component. And then marketing. We could spend hours and hours and hours on trying to make sure that you understand, and I'm learning every single day about how to kind of maximize putting the least amount of money in and maximum amount of opportunities out of like marketing stuff. But the simplest way to probably get started that, Rob Chavez is always kind of just mentioning is like, write letters. Pay your kid to write some letters on a yellow piece of paper with a red felt tip pen. I mean, like, it's not complicated. Hey, noticed your house. We want to, if you're interested in selling, we buy properties like yours. Please give us a call. I'm a real person. This isn't written by my daughter. Whatever. Just like, send those out. Is it 55 cent stamps? 66. Oh, goodness gracious. So 66-cent stamp, and boom, you're marketing, right? So just how many of those can you get written? How many can you get out? Prospecting, networking, marketing. Stefan, what would you add?
So I do 0 prospecting, I do 0 marketing, and I just network because I like networking. This is fun for me. Like I like this. So you don't have to do really any of these except for that. I mean, Daniel, I think he's really great.
He does too. So.
Yeah. That's so perfect. Listen to what he said. I do 1 and 3, and he does number 2. So you don't have to do everything. You don't have to do everything. I've used agents when I've been licensed. Like I said, I use Danny. He got the commission on my house. He found that house for me. I'm perfectly happy to pay him a commission because you don't have to do everything. It worked out really well for me, and he got a nice commission. You don't have to do all this. You got to find somebody who can do this stuff for you because if you like it, then great. I love networking, so I'll network. Danny's really great at prospecting. He's a beast. He just smile and dial. I hate that. I just absolutely. I love talking to people, but I don't like cold calling people. So yeah.
Find your lane. You can do all of them, you can do one of them, but you can't do none of them. That's hard. That's real hard. Unless you just pay other people to do it, I guess. All right, anything else? Find a database, feed it, budget, track marketing activity, be purposeful. You can waste a lot of valuable time and money if you don't have a great plan or a model to complement. Yeah, that's why you guys are here, right? You're looking for ways to kind of make sure that you're not going to be spending time, money, effort, and energy in fruitless endeavors. Let's do anything you want to, any other story you want to make sure that you share, or any other idea or concept we can get out of you real quick before I ask them one more question?
Yeah, I'll tell you. I mean, there was a conversation I had with Rob Chavez, who's one of the founders of Real. I mean, I remember we used to be business partners way back in the day, and then Rob did the whole agent thing way before I did. And I just called to check in one time, and I'm like, "What are you up to this year? What are you investing in?" He's like, "I'm buying these places in Herndon." And I thought, "Oh, awesome! I love talking real estate." So I was like, "Tell me about it. You getting like really good deals on these?" He's like, "No, I'm just kind of buying them at market value." And I said, "Oh, okay. Are you like renovating them and adding value?" He's like, "I mean, we're doing some lipstick jobs here and there, but it's pretty." And I'm like, "This is so boring." and like 10 years went by, and I remember asking him like, "Whatever happened to those properties in Herndon?" Because he bought like 10 or something. And he goes, "Oh yeah, like they're paid off." And I was like, "Holy shit, how did you do that?" And he's like, "I just took the cash flow and I like snowballed. It started like paying down and it just like did it." And I'm like, it's that easy. He didn't have to do anything. Like he didn't say, "Hey, we went in, we redesigned it, we added a second floor." I mean, if you can do that stuff, you can make more. He just did that. And I'm like, most people have 10 paid off houses. They don't have to do anything else. That's it.
Here's the additional part of that story, because I'm super close to that whole scenario, is he didn't even pay a dime for the houses. He had a partner. He had a money guy. One of his guys had a couple $1 million and he didn't know what the heck to do with it, and he wasn't really super sophisticated in real estate at the time. Rob lived in Reston. He could drive 15 minutes to Herndon. He found the houses and he said, "Look, I got one we should buy." The money guy bought the house, paid for the renovations, but because Rob was the one that found the deal, Rob owned 50% of the house and the money guy owned 50% of the house. So he owns 50% of 10 houses completely paid off because he found them. Right? Like that's, so put the deal.
I think he found them on the market, right?
Most of them, some of them were coming, but yeah, some of them would have either, if they didn't find them on the market, he got to the agent slightly before they put them on the market, kind of thing. But it was through agents and just random stuff. But yeah, and that was like, and here's the biggest mistake that Rob said he made in this whole process. This was 2008 or so when he started buying these properties, and he probably bought 9 or 10 of them in a period of 18 months. Let's just say maybe it was 2 years. But around 2010, 2011, the values had slightly started creeping up, and he's like, "Oh yeah, I'm not buying them anymore. They're getting too expensive." He's like, "What was I thinking? Like,
Yeah.
they got too expensive because they went up 10 or 15%? Like, what is?"
So that dialogue is always present. And now what people say is the rates are too high.
The rates are too high.
And I think, you know what? When the rates go down, what do you think the housing prices are
They're gonna go.
So people always have excuses. They're always like, I'm gonna wait for the market to drop. I mean, if you look at long term, the market kind of goes like that. There are little dips here and there,
Sure.
but you don't need to time the market. I don't believe anybody can do that.
What is it?
Just think long term.
It's don't wait to buy real estate. It's buy real estate, and like you said,
I love that.
sleep in it.
Yeah, I love that.
Or wait. Don't wait to buy real estate. Buy real estate and wait. I like yours. Don't wait to buy real estate. Buy real estate and sleep in it. Yeah, that's fantastic. Okay. 2 people have got to give me just like one takeaway, one aha that you got from tonight, and we'll wrap it up. Dan, thank you for volunteering.
So one of the most obvious things is how everyone's talking about all the money they made because of the partners that they had. So I recommend everyone in this room talk to the people you know about the fact that you were in this room.
Talk to them about the fact that you have an interest in this. They might share that interest, or you might pique that interest. Invite them out. Even if they aren't, Daddy Warbucks, they might know a Daddy Warbucks that they then bring. And then through that, you might find yourself actually having access to a lot of money partners. A lot of, maybe your Uncle John actually is a super sophisticated investor and he just never talked about it because you never talked about it, right? You don't know the value that's already waiting in your existing network if you don't open your mouth and share.
Yeah. And last month, we had probably like 8 people in the room. It was just like sometimes it happens in the summer. This room tonight is a little bit more full. We'll get a bigger space. Don't worry, like if I gotta go rent a conference room at the hotel here, like we'll rent a conference room at the hotel. So bring people out and we will go get more space if we need to. Yes.
One thing I had a question in my mind to think of.
And questions too. Ahas and questions, sorry.
Well, this is an aha. So I know what kind of properties I want to buy. I know some areas that I want to buy, and I wanted to connect the dots of how to get that, like how to. And then you guys said there's a whole bunch of instruments out there. The only thing you have to be is an architect of the deal.
Yeah.
I was like, oh, of course. Like I'm not walking around with $1 million, but somebody is.
Yeah.
So just figure out what I need and then just put it together.
You can even get it with just the certainty, because people lack that. If you show up in your sphere and be like, because that concept is out there. People have lived here and seen what happens, and they're still not doing it. So you can just show up with certainty, and that's enough to be the architect of the deal. Like, hey, I know this agent. He can find us a good deal, and we can do this, and we'll wait 10 years, and we'll make whatever. That's it. For sure.
Can I build on what you just said? Sure. Because it's so true. My first year in real estate, when I knew nothing, but I had a background in sales, so I knew confidence. My whole first year was talking to the client, hang up the phone, call Matt. Oh my God, Matt, this is what they said, and this is what I need, and I don't know how to do this. Please help me, right? And it was just a year of that, and it was a killer year. I learned so much. I helped so many people through their problems. So he's absolutely right. Have the confidence. You don't have to know every answer in order to be confident, right? Because you can rely on other professionals to help you through that piece.
Yeah. And we want to help you guys. Like, you got my number. I'll be happy to field your call. These guys, anybody else, I'm sure they'll be. That's this community. The community is built on like being a go-giver. Any other questions or anything else anybody else wants to say?
If we have time, I have 2 more quick concepts.
Yes, please.
You guys want to hear about the tax thing I talked about?
Yes,
earlier?
do it. Yes.
Yeah? Sorry. Okay, and also another strategy that can work like BRRRR. Okay. It's not BRRRR, but so my sister was living in Denver at the time, and I said, hey, move here, come work for me, and just buy whatever I say, and in 5 years,
do what I do.
in 5 years,
This is your little sister?
My little sister.
All right.
Just travel the world. And so she did. She moved here. So, at the time I was paying her like $50K. So it's not a lot. She didn't qualify for a lot of stuff. But her and her boyfriend came here, and we would just, our house hack that we did is say, okay, buy a house 3.5% down as an owner occupant. 6 months later, he'd buy a house 3.5% down. Then she'd move out to that house, and then she'd buy, because now it's been a year, she'd buy another house. And we bought something like, we actually did a little bit faster, because one of the houses they were able to get out and buy another one really quick, because they had specifically asked, can our cat live here? And the conversation said yes. Then they moved in and they said, you can't have cats. So the lender was like, okay, we'll let you get another one. So that was like, I don't know, they were there for like 2 months or something. So they got like 6 houses in a very short period of time. And this is back when rates were really cheap. So their average cash flow was like $1,000 per house. And they didn't have to, they came up with the first down payment. But what I did, I said, look, I will put up the money for the down payment to buy in after you own it. So now I'm coming in as a partner and reimbursing them for whatever money they had. And so they're not having to come up with any cash. And they have all these properties. And now the cash flow is great, but the mortgage pay down, the appreciation, like this is it. They don't do anything else. They're gonna be multi-millionaires just waiting. So that's a way you can do that too, is just moving. Moving in real estate can make you a lot of money. If you call him every 2 years and say, I want to go get another house, but just has to be a deal, that's it. Like, we're gonna live here for 2 years, we're gonna sell it and make $100,000. And they're not out there everywhere, but I'm sure you come across some.
Yeah.
And that can be, you make like $100,000 every 2 years tax-free. That's, I mean, some people work 40 hours a week for 2 years to make that much money. And that's like after taxes. So that's a really powerful concept that you can do. The tax thing. So when I first heard this, I was like, this has to be illegal. But I paid somebody a lot of money, CPA, to do this, so I'm trusting it's not. This is what the rich do. Real estate allows you to not only get rich, but also keep the money and not pay taxes. So if you buy a property and you're an active investor, so like you're managing your properties, this is really the only reason that I would be managing these things without a property manager. You can do what's called a cost segregation appraisal. Everybody knows about depreciation on houses? Is that, yeah? Okay. So normally you can depreciate over like 27 and a half years. With cost segregation, you can depreciate parts of the house a lot faster. So you could buy a house, I'm gonna make up some numbers here. So you can buy a $500,000 house, and, or let's say $1 million for a round number. You might be able to write off like $300,000 in a couple of years. And so you're not actually losing that money, but the IRS says it's as if you lost this money. And you can use that against your ordinary income. So now, you're not paying taxes on your ordinary income. So now what does that mean? The money you save on taxes, your next down payment. So you can just repeat it and keep getting more houses. And then here's the magic. When the rich want money, they're not selling real estate. They're getting a loan on the property. That's not a taxable event. And guess what? They're not paying it back. They have a tenant who's paying it back. So you're getting an asset that at some point is gonna double. Somebody else is paying for it. You want money, you can take it. Somebody else is gonna pay for it. And then you just keep buying more and you don't pay taxes. And now this is the piece where she can come in. Then if you do your estate correctly, your heirs can inherit the property at the raised basis, so you never pay taxes. You can do 1031 exchanges when you sell and go buy more real estate. You're delaying the tax bill until you die, and then there's no taxes. Your heirs get those properties. That is crazy. And the fact that more people aren't doing this is equally crazy.
Yeah, so there's some complicated stuff in there. You guys, raise your hand if you're like, dumb that down for me.
Oh my God. Here's how I dumb it down. Ready? CPA, real estate agent, done. You don't understand.
Good. The only, was there one other thing I was going to just say on top of that, and we'll come back to me if not. Any questions, any other comments, thoughts? Omari.
I just wanted to ask, when you're giving your property to the next generation, you're talking about a trust, something like that, I guess.
I think that's a question for
yeah.
back of the
Yeah, no, so you could do it multiple ways. I mean, if you're inheriting it, you could do it transfer on death deed, or you could just put it, they can will it, but yes, you want a trust. If you're not doing trusts, you need a trust. But however the property gets to the next generation, simply because they inherit it from you, that's what secures this step up in basis.
So just real quick, you buy a house for $500,000, okay? It goes to $1 million. You sell it. Now you have all this equity to buy more houses. You 1031 it, so you're not paying the tax on it, and you buy 2 more. Or actually a more expensive property or whatever. But that goes up and eventually it's $10 million. You should have a really big tax bill that you're gonna pay. You die, it's in the trust. When your heirs inherit the property, the IRS says, well, what's it worth when you got it? And they say $10 million. What are you selling it for? The next day, $10 million. Okay, you don't owe us any taxes. That's crazy. So I left out CPA, real estate agent, and lawyer.
That's right. That's right. Thank you. Yes.
I just wanted to make sure that everyone remembers before you leave here tonight, one of your goals, if you're here to network, is to actually get people's contact information, right? This man at the front of the room is a wealth of knowledge. I would recommend that you approach him and get his contact before you leave. I just know that since we're about to wind up, so often people will stand up and leave without even grabbing that information. So make that an important point, right? You never know what you're gonna need. The room is full of gold if you're willing to dig.
And I'll say this too, you mentioned this earlier, is that spread your network, invite them, because this is now your community. And the bigger you build this, the more exciting speakers that you can get. You can get people more experienced than I am if it's a bigger group. So invest in that, and also as you build wealth, invite the ones you love to do it too. they just come out and see it. You know, maybe that might be a life-changing experience because they just came out and bought one property. And maybe that's their retirement.
Perfect, thank you for that plug. So here's the thing, join the Grid Facebook community, just www.gridfbgroup.com. You can check out all this stuff on our YouTube channel, Grid next month's events. Please RSVP for, I'll put that back so you can take a photo. RSVP for next month's Grid here, the second Tuesday of every month. If you guys RSVP, if you're not already a member on meetup.com of this, just register. I'm communicating on a regular basis with who the next speaker is going to be and all that kinds of stuff. I don't actually have next month's speaker right now, but you know, I'll put that out there, so make sure you register on the Grid CAZA Gainesville's meetup.com page, and I'll be communicating with you guys through that. Anything else for anybody else?
I don't mean to be a hog.
Oh my goodness, what do you
The opening question that I had for the room was what kind of software or systems are you using in order to run your math? So would you mind, how do you run your math? Or is he the math guy?
We actually have like an excitement meter that we kind of use. Like if we're happy about it, we just go for it. But I will say this. I'm serious. I have not worked a day in my life with him. It's so much fun. And we've done some horrendous stuff. I mean, you remember the last clean out we did, which I don't know why we did that, but yeah. But
It's trauma bonding.
it's the answer is this. I do deals that I don't have to be precise to the penny. So I just go in and make an Excel sheet and I say, okay, what am I buying it for? What's the renovation cost? And a lot of them I'm not seeing the house or I see pictures of it.
Yeah.
So I'm ballparking that.
Yeah.
But if I'm off by $10,000 and that means I lose money, my answer, if I'm off by 50,000 and we still make money, then I'll say, yeah, we'll do it. So it's not that I have to be super precise to the penny. I'm just looking for it to be a good deal. And a good deal, you don't have to be super accurate. But I use Excel sheet and I do plug in the stuff. I'm a holding cost, I'm looking at agent fees, closing costs, that kind of stuff. So
Buffer, a little bit extra,
yeah, it doesn't have to be super exact. I mean, you don't want to leave out something like the renovation, you know? But that's it. On the rentals, I'm a little more precise. I sometimes on a rental will calculate in maintenance costs over like, because it's hard to predict what you're gonna have to spend in the next year. But over a 10-year period, I'm like, I'm gonna have to replace the stove. I'm gonna do the roof. I'll cost that out and then divide it by 10. And so then I'm like, okay, this is now accounted for. So I'm not going in and buying a property I think is positive cash flow and I'm actually bleeding out. I'll be more precise on that. And I think a lot of people are more sloppy on the rental. And I think that's more important to really do that.
Yeah.
So, and vacancies and all that stuff.
Yeah. Good. Stefan, thank you. It was
Yeah,
absolutely
it was fun.
amazing.
Thanks
No
for
doubt.